In today's episode, we're diving into one of the most significant financial crises in American history, the Panic of 1907. While it may not be as famous as the Great Depression, the Panic of 1907 reshaped the U.S. financial system and laid the foundation for modern banking regulation. What caused this panic, and how did it affect the economy? Let's explore. The state of the economy in 1907. At the dawn of the 20th century, the United States was experiencing rapid industrial growth. Railroads, oil, steel, and manufacturing were booming, creating an era of prosperity. However, the financial system was still young and largely unregulated. There was no central bank, and banks were vulnerable to panics, especially because they often lent out far more money than they had on hand, relying on trust rather than reserves. The spark of the panic, the Knickerbocker Trust Company. The Panic of 1907 began with a single event: the collapse of the Knickerbocker Trust Company, a major trust in New York City. Knickerbocker had been heavily involved in financing speculative investments in mining stocks, and when one of its large investments failed, rumors started spreading about its financial instability. Led by Charles W. Morse, the Knickerbocker Trust had borrowed large sums of money and lacked enough reserves to cover its debts. As news of the company's troubles spread, depositors rushed to withdraw their money, sparking a bank run. The ripple effect in bank runs. The panic quickly spread. Other banks, especially those with similar ties to Knickerbocker, began to feel the pressure. Depositors feared that their banks would fail next, and many rushed to withdraw their savings. As the rumors of insolvencies spread, several smaller banks and trusts also collapsed. The situation worsened when even J.P. Morgan, one of the most influential bankers of the time, struggled to prevent the crisis from engulfing the entire banking system. J.P. Morgan's role in the crisis. Amid the chaos, J.P. Morgan, the powerful banker, stepped in to stabilize the financial system. Morgan used his influence to convince other major bankers to contribute funds to bail out failing banks and prevent further panic. In one pivotal moment, Morgan personally intervened to prevent the collapse of the New York Stock Exchange by negotiating with bank leaders and offering emergency loans. Thanks to Morgan's efforts, the immediate crisis was contained, but the damage to public trust in the financial system was done. The aftermath: economic impact and reforms. By early 1908, the immediate crisis had passed, but the Panic of 1907 left deep scars. The U.S. economy plunged into a mild recession, and many businesses struggled to recover. The panic also exposed the weaknesses of the banking system, particularly the lack of a central reserve that could provide liquidity during times of crisis. This crisis would prove to be a turning point in the nation's financial history. The creation of the Federal Reserve. The aftermath of the Panic of 1907 led to significant reforms in the U.S. financial system. The U.S. government recognized the need for a central authority to regulate banks and manage economic crises. In 1913, after years of debate and legislation, the Federal Reserve System was created. The Federal Reserve's job was to act as a lender of last resort, providing banks with emergency funds during financial panics and overseeing monetary policy. The creation of the Federal Reserve helped prevent future panics and laid the foundation for a more stable banking system. Lessons learned from the Panic of 1907. The Panic of 1907 taught the U.S. government valuable lessons about the importance of a stable, regulated banking system. It showed that an unregulated financial system, where banks could fail without warning, was a recipe for disaster. Today, central banks like the Federal Reserve play a critical role in maintaining economic stability and responding to financial crises. While the world's financial systems are much more complex today, the lessons from the Panic of 1907 still guide us in times of crisis. The Panic of 1907 was a pivotal event that reshaped the U.S. financial system and had a lasting impact on banking regulations. What do you think? How important is it for countries to have central banks and financial regulations to prevent future panics? Let us know your thoughts in the comments below. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon for more in-depth stories from financial history. Thanks for watching, and we'll see you in the next video.